And when the sell signal bar 6 looks like this and is not all that strong, and I would say maybe only 40% chance this is going to lead to the start of a bear trend. But if we start to get bear bars closing on their lows, one very big bear bar, 2 medium bear bars, 3 smaller bear bars, then the odds will shift in favor of this being the high of the day. When the market tries to do something repeatedly and fails, it then often tries to do the opposite. And we keep trying to get above the Globex high. At some point, if we're unable to get there, the bulls will give up, they'll sell out of their longs, and the bears will start to sell, and we could get a reversal down. Right now, it's still more likely that we're going higher, even though a tight trading range is typically neutral. If a tight trading range is occurring in a bull trend, there's always a slightly higher probability that we're going to get an upside breakout than a downside breakout. It's close to 50-50, but the odds are still better than 50-50 for the bulls. And then when you add to that, the Globex high being just above, we're probably going higher. If the bears get a bear bar closing on its low 11, you probably will start to get traders taking a chance that this is the high of the day. You can call it a double top 7, or you can also call it a truncated wedge, where we have 3 highs, 1, 2, and 3, where 3 does not go above the high of 2. Fairly common to have a truncated wedge. Most traders would call it a double top, 5 and 10, but it's the same forces as a wedge. 3 attempts to go up, all 3 failed. But the bulls were not strong enough to get above the second high. So for example, let's say the high of 10 was 1 tick higher than the high of 5, and then we reversed. So it would look almost identical to this. We would call it a wedge because we'd have 3 highs. Is that much different from what we have? Right? It's 1 tick different, right? So to me, it's the same forces as a wedge. So it's a variation of a wedge. But most traders would call it a double top. I would call it a double top, and I would call it a truncated wedge if we were to reverse down here. That's not a good enough sell signal bar, so the odds are we're still going higher. Will we go a lot higher? Doesn't look like it, but we should go at least a little bit higher. If we were to reverse down here, we would have 3 highs, 2 higher highs. It would be a wedge. Now, I keep talking about the market going above the Globex high, and I've been saying this is not strongly bullish, and therefore we might get a reversal down from above the Globex high. Now, something else. Look at the time. We're in the final seconds of the first hour. First hour looks like it's going to close on its high. And whenever you have a bull bar closing on its high, a strong 60-minute bar, the next bar tends to go above that bar, above the 60-minute bull bar. But a lot of times it just goes 1 tick above or 2 ticks above and then reverses down. And we have to go a couple ticks above to get above the Globex high. So it's possible that based on the 60-minute chart, we may reverse as well. As I said, a lot of times if you have a pretty good bull bar, the next bar will go above it by only a tick or 2 or 3 ticks and then reverse. If you have a pretty good bear bar, a lot of times the market will go below it by a tick or 2 and then reverse up. So a tight trading range, a magnet. So if we go up, we'll tend to get pulled back to the magnet. If we go down, we'll tend to get pulled up to the magnet. We have a 60-minute bar closing on its high, and that would increase the chances that we're going above the high of the bar. And the Globex high is just a few ticks above, a couple ticks above the high of the day. So another reason to expect it to go up. But if the bulls do not break strongly above the Globex high, then I think the odds will favor a reversal. I still think this does not look like a bull trend from the open. So far, it's a small pullback bull trend. We have a bull trend, we have a 1 bar pullback. It's small. A 1 bar pullback, 3 bar pullback, but their pullback is small. And yet we're making new highs. So it's a small pullback bull trend. Sometimes they start out not being strong and then become stronger after an hour or two. So it still could end up as a huge bull trend day. But right now it's probably a bull leg and a trading range. So it's probably this kind of a thing. So chances are we're going to get a swing down. However, the chances are we're going to go above the Globex high before we get a swing down. Whenever something is obvious, the exact opposite has a higher probability than what you would imagine. Usually things that are obvious are not as high probability as obvious would imply. Because if something is obvious, the institutions are already positioned for that move, and there may not be enough other people to come in and make the obvious thing happen. Right now, I think we're going a little bit higher, and then I think we're going to reverse. Not necessarily a bear trend, but swing down. I think we're in a trading range, and this is a bull leg, and that means we should get a bear leg. It's possible the bear leg becomes a bear trend, but at a minimum, we should get a bear leg. 60-minute chart, a lot of bars without touching the moving average. These are all different streaks and bull trends. Okay, this is the one that I wanted. Remember I said in April there were a lot of bars without touching the moving average. In fact, there were 67. 67 bars where every low is above the moving average. And then we finally touched it on the 68th bar. And I said bulls would buy it, and they did. But this is what followed. We got a bigger pullback here. So they buy the first reversal down, and then they start to take profits at new highs, and typically you get some kind of a trading range. I showed that on the daily chart. Here's that streak, and we had a pullback. They bought it, and then we had a second leg down, and then sideways for a lot of bars. And that's probably going to happen here also. But we have not had the pullback yet. And if you get the pullback, we could get resumption up a lot more than just a bar or two. It could go a lot higher. So chances are we're going higher. But chances are we're going to get a pullback soon, in the next few days. Can today be the pullback? I don't think so. I don't think this is a 10-bar moving average. Let me go here. Here's a 20-bar moving average. I don't think today is going to get down to the moving average. This is 9 bars up. Basically, it's a micro channel. 9-bar. Well, I don't know if that's a pullback, but it's a lot of bull bars. So it's unlikely that we're going to go down enough to get to the moving average today. So we'll probably have to wait for Tuesday or Wednesday. But we could stop going up and start to go sideways. We could do that, or we could do that. Another high one and a small pullback bull trend. It's still long. It's still always a long. Some bulls bought above 3, others bought above 4, others will buy here above 14. And everybody who's buying is hoping that we suddenly get a very big bull bar. And they know we're probably not going to get that. So they want, like this, a couple of big bull bars or one big bull bar. They're hoping that we're going to get a breakout above the wedge and a measure move up. And they know that's probably not going to happen. But they're buying with that hope. And if instead we go a tick or two above the Globex high and quickly reverse, instead of holding for a swing up, they'll scalp out. So they're hoping that we just fly up here, but you're buying at the top of a tight trading range. So the probability of a big move is small, and it's more of a limit order market. You can see there were a lot of sellers at the 14 high, even though it's a high one and a bull bar. I have to turn the screen off for a minute. I'm working with TradeStation. There's a bug on this computer, on their program. Sorry about that. I was on with TradeStation. There was a problem with the setup. There was a bug, and I had to do some stuff with them. All right, so we're very close to where we have to be. Right, we're just below the Globex high. And you can call it a triangle. You know, we have higher lows. This is a 15-minute chart, and then a horizontal top. And we should break out. The question is, will it be the start of a big bull trend, or will it just go up for a bar or two or three, and then reverse down, creating the high of the day? The traders who bought for any reason, let's say above 16, they're going to be pretty quick to get out. They want it to break strongly above the Globex high. They want a big bull surprise bar. And if we break above the Globex high and do not race up, I think a lot of those bulls will scalp out because they'll be concerned that we'll reverse. Some of the bulls who bought above 16 were disappointed by 17, 18, 19, and they're getting out around break even. I'm one of those bulls. I did buy there, and I exited, even though I still think the odds are we're going higher. Nothing has changed. The odds still favor the market going up. The question is how much. Will it just go a tick above the Globex high, or will we get a big breakout? And it could be the one. We could go a tick or two above and put in the high of the day, or we could break out and begin a very strong bull trend day. Mark is still deciding, is this going to be a huge bull trend day, or are we looking for the high of the day, and will we then begin a swing down for an hour or two? You can see a lot of the bulls who bought above 16 are scalping. And what do you notice about the high of 21? Okay, it's 9 ticks above the high of 16. Bulls looking for a 2-point scalp needed to get 10 ticks above for them to make 8 ticks. They buy 1 tick above 16. They place a limit order 8 ticks higher. It has to go 1 tick above their limit order to get filled. And we went up 9 ticks and reversed down. So what's going on? That tells you that there were a lot of limit orders to sell 9 ticks above 16. And that means a lot of the bulls were so disappointed that they decided only to scalp for 2 points instead of holding for a successful breakout and a big bull trend day. So right now, that's a sign that the bulls are not as confident as they could have been. If 21 looked like 4, then bulls would buy the close and buy more higher, betting that this is the start of a big bull trend. Instead, it reached their limit order 9 ticks above 16 and sold off. When it hit their order and did not fill them, a lot of them quickly hit sell the market, and that created that tail on top of 21. There are bears who expected that the bulls would be weak and quick to exit, so the bears sold there as well. It still could be a successful breakout. You know, sometimes you'll get a breakout bar and it pulls back below the breakout point. The 21 close is below the 19 high, but the bulls need follow through soon, either on 22 or 23. The longer they go without getting follow through, the more likely this is going to be the high of the day, or that we'll put in the high of the day in the next few bars. And if we reverse, will we get a big bear trend day? Look at these bars. 15 bars, just all prominent tails, small bodies, and a lot of overlap. That's not a sign that traders think the price is terribly wrong. They think the price is just about right. it reduces the chances of a big trend in either direction. It still can happen. We're still early enough in the day, but right now, the bulls need to do more, and the bears need to do a lot more if this is going to be a trend day. Because it's a reversal bar, it closed below the midpoint, it's reasonable for bulls to get out one tick below 21, or they could get out below 20, or they could get out a point or so below 21. And for the bears, it's a reversal bar, and it's a wedge, 5 and 12, but a bull body in a small pullback bull trend. I think the bears should wait to sell. If they're looking to sell the stops, this is not strong enough. Remember I said 4 could be a spike and that we could get 2 more legs up. We have that. So spike up, second and third. So now we have a wedge, but it's also a small pullback bull trend. And 21 is a weak sell signal bar. So not worth shorting yet. Another inside bar. So it's still another by the close high 1 in a small pullback bull trend, but it's not a very good bull trend at the moment. But it's a credible swing. What happens is if this continues in a bull trend day, we will get 1 or more strong big bull bars. And then you'll look back and say, wow, 16 was a good buy, 22 was a good buy. And they are good buys if you're willing to take a chance on a swing. The probability is not all that high, at least not yet, but it's a reasonable thing to do. It's still always in long. It's still by the close. And what happens here is you do have bulls buying. That's why we're going up, right? And the pullbacks are small, right? But we still have not become clearly strongly bullish. So you have a lot of bulls waiting to see if we get a pair of consecutive good-sized bull bars closing on their highs. But I think it's okay to be long. You can always get out on a stop a point or so below a bull bar. You can get out a tick below a bear bar closing on its low. Or if you can wait to see if this starts to accelerate up, will we get a pair of consecutive decent-sized bull bars closing on their highs? Will we start to break strongly to the upside and possibly go up for a measured move? So we have a weak bull trend to this point, and the bulls are hoping that we're going to successfully break above it and go up for a measured move. That would get us up there. So the close of 24 above the close of 21, good for the bulls. The risk, maybe you get out a point or so below a bar, so you're risking 3 points, but you're trying to make 7 or 8 points. So even if the probability is only 40% at this point, the math is still good. I went back to long above 22, but like I said, I'll be quick to get out if this starts to reverse. We're at a decision point right now. We have a breakout, 24, close above 21, but will the breakout fail? Will we get a bear bar 25, especially a bear bar closing near its low? If we do, bulls will get out and bears will start to sell. Because it's a very tight bull channel, only very small pullbacks, a lot of bears will wait and not sell the first reversal down. They'll wait to see if we get 2 bear bars or a very big bear bar. 24 is the close of another hour, and the hour closed near its high. And as I said earlier, if you have a 60-minute bar closing near its high, the next hour tries to go higher. Sometimes it only goes 1 tick higher and reverses. 25, it's the minimum follow-through that the bulls needed to see. What they wanted was no bear body. They really wanted a big bull bar closing on its high, but the minimum they wanted was what they have, no bear body, 25. So it's still more likely to go up than not. But because we have a breakout and a wedge, we have a wedge 5, 12, and 21. We have a breakout 23. barely breaking above the wedge, that follow through barely what the bulls want, right? So this is a decision time. Is the breakout going to succeed, and will we get a measured move up? Or is the breakout going to fail, and will we start a swing down? Yesterday we had a wedge and a breakout, it failed. And then here we had consecutive bull bars. We had a double top and a double bottom, double top, and we broke out. We had 2 consecutive bull bars, and then we got a swing up. So a breakout is better if the breakout bar closes on its high, closes far above the breakout point, and if the next bar is also a bull bar closing near its high. If you get that, you have a better chance of higher prices. What happens with these breakouts is a lot of times they start slowly, and then once everybody becomes confident that the bears are unable to get a reversal down, you start to get more bigger bull bars, and you tend to get, a breakout and then trading range, breakout and trading range. That's if this is going to continue, and it might. Small pullback bull trend. You're getting pullbacks, but they're all small. Sometimes you'll go sideways for 10 bars, but the pullbacks are still small. And sometimes it starts weak, a lot of sideways bars with dojis, but this is what you want to see. You want to see 2 bull bars closing near their highs. And you want to see another breakout with a bull bar, and here a couple more bull bars. And we're not yet getting that. And if we start to get that, it'll increase the chances that we could go up all day. Sometimes it starts out fairly slowly, and then everybody just buys very aggressively, and it accelerates up. So a fairly tame bull trend to this point, a lot of smaller bars, and then the bears gave up, and the bulls became very confident, and we accelerated up in the middle of the day. The slow start, possible wedge or expanding triangle, and then broke above. I'm looking to see if I can find a day similar to today. Here, kind of weak, and then became stronger. Weak, and then became stronger. Here, this is important. 2 bull bars, 2 more bull bars, 2 bull bars. Normally, if it's going to last all day, we will have at least a couple breakouts with a pair of bull bars. Here, like this is kind of like today, going up but not strongly, and then we started to accelerate up. The bulls need acceleration up. Nothing impressive, and then got stronger, and then got very strong at the end of the day. Might get 00, outside up 26. Bears trying to get outside down. They're trying to get the 27 low to be at or below the 26 low. And if they get the bear bar closing below its midpoint, a lot of the bulls will exit. If they get a bear bar closing on its low, you'll start to get bears shorting. Kind of it's not really consecutive wedges, but it's almost a consecutive wedge deal. We got that wedge, and then we can say this is a wedge here, but I think of it more as the wedge starting here and the third leg being there. So a wedge, and the first leg of the second wedge is the third leg of the first wedge. So it's not really a consecutive wedge type of top. What happens if it's an inside bar? Again, if it is a bear bar closing below its midpoint, bulls will get out below the bar or below 26, and bears will start to sell, but in a small pullback bull trend, they want as bearish a bar as they can get. And because the bull channel is tight, a lot of the bears will not sell below 27. They'll wait to see if we get a bear surprise bar, or they'll wait to see if we start to go sideways and get some kind of a small double top. IOI, breakout mode. So for the bears, it's a low to top 25, and for the bulls, it's a pullback and a bull trend, so it's a high one buy. You can see how the computers are buying right into the close of the bar, preventing bear bars. The bull bars are not all that strong, 21, 22, 23, and then 26, 27, but they're still bull bars. And 25, they prevented it from being a bear bar, so this is now 7 bars without a bear body, which is a subtle strength. Good bar for the bulls. The more bars they get like that, the more likely we're going to go higher. It's possible that this is a measuring gap. I'm going to change. There are 2 ways to draw. It's possible that this is the breakout and this is the measuring gap, but this close is far above that close, so it's a clearer gap. The measured move might be from the 28 high. We have 2 breakouts. 24, here's the breakout point, and then we have another breakout here. So maybe the pause at 26 is the breakout point. I don't want to put both on, but this is the nearer of the 2 targets. Traders, I'm still long. I don't have a profit target. I'll get out, as I said, a point or so below a bull bar and a tick below a bear bar closing near its low. And I'll probably buy more on the way up. Now, how can it be going up if it's already extremely overbought? That happens all the time. Markets can go a lot further in a trend than what you think is likely. Bears trying to get a reversal here. This is the best looking bull bar, since bar 10. So in about 20 bars. So I'll be quick to get out if we do get a reversal on 29. When you get a good looking bull bar late in a bull trend, it often attracts profit takers. And if you have enough profit takers, you can get a reversal. Is there anything the bears can do with 29 to make a lot of people want to sell? Probably not. Just look at the pullbacks, especially starting bar 9, just a tiny pullback, tiny pullback, tiny pullback. And when you have those pullbacks all being tiny, what that tells you is as soon as it gets even a little bit below the low of the prior bar, bulls are buying. And it also tells you the bears are not selling below bars. Since bar 3, how much money have the bears made selling below bars? Below bar 9, it was a 5-tick trap. You could argue they sold below 6 and made 1 point, but that was it. So since bar 7, the bears have not made money with stop orders. Consecutive bull bars closing near their highs. So a bull surprise is a change in the character of the trend, and a surprise usually has at least a small second leg up. A lot of profit taking, right? So bulls are taking profits. Could be a blow off top. Reasonable to get out of longs a point or 2 below a bull bar. And if this is a pretty good bear bar, it's reasonable to get out of longs below it. I just took some profits. This is going up too far too fast. And it's coming, you can see, this tail is caused by bull selling. Do you think it's caused by bear selling? I don't think so. I think it's mostly bull saying, wow, it normally does not have 3 big bull bars like this, and therefore it's doing something unusual. And if it's doing something unusual, it's a great opportunity to take some unusual profits. Normally the breakout is either 1 bar or 2 bars. It's usually a couple bars. And here, not only was it a couple bars, it was a couple bars, and the third one was especially big. So a lot